Welcome, everybody, to the Chinchilla Pickin' Podcast. It is March the 9th, 2025 at 3:44 p.m. My name is David Underwood. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. I am joined by the one and only, the ponytail himself, Brandon Beaver.
Yeah, brand new ponytail. Listen, we're all trying to make cuts here. We're all trying to be as efficient as possible. So I'm just going to save everybody's time. We'll do the entire show right now. Buy Nvidia, and I hope we were entertaining, educational, and uplifting. Have a good night.
That would be a great that would be true show. I would agree with that. You could get my stamp on that if that was only the case. There's just so much that's happened. We didn't put out a show last week. I apologize. Brandon had some issues, and I said I would do one real quick, and I did not. Although the same thing happened the week before as it did last week, which was the markets were tanking. And it was I wake up in the morning, I look at my, watch list, Brandon, and I cry a little. No, I mean it's down right now.
It's exciting.
Everything's down right now.
Get excited about it. You're getting some
Right?
value. Finally, we probably have a little bit more to go. That's my feeling. But
Really? So I mean, all right. I told you before we started recording, I was gonna ask this to start the show. Is there a little fluff piece? Is about this sentiment right now and how the talking heads on CNBC, Bloomberg, and Cheddar have all said that this market downturn is directly to do with the current administration's tariffs and that's going to drag down the economy and it's the worry about that. Do you agree with them or do you think it's a broader issue? Do you think it's a different issue or do you think that's just one of the issues?
no, it's just one of the issues. But right now, the tariffs aren't having any effect yet, other than sentiment. They haven't had
Right.
time. They haven't had time to. Um, I think the sentiment about tariffs is correct. I think it's the wrong path to go down, and I think it can be dangerous, but we haven't gotten there yet. I think the biggest issue that we're seeing right now is the fact that the unemployment market is normalizing. We just saw it tick up from 4% to 4.1%. And then on top of that, you just have sustained inflation. Now we're down to 2.6%. So we're closer to the Fed target, but we're on top of all of the prior years that we've had high inflation, 13% in the past few years right now. Um, Food costs have been the brunt of that. They've been the most of that. They're almost double the inflation of everything else. So the cost of living is going up. People are feeling the pinch, and it's taken a while to get here. And there could be a recession on the horizon because of that. We don't know yet, but it could happen. Um, but as far as it all being tariffs, one of the things that you have to like really like train yourself to do, critically think through whatever you're reading or you're watching, right? So one of the reports that I was reading this morning that was negative, it said companies like Domino's, McDonald's, and Bloomin' Brands are reporting that there's pressures facing their businesses based on inflation and their consumers. Now, two out of the three of those companies have had financial problems long before this, and even prior to COVID. McDonald's has not been doing well, historically speaking, for a while now. Bloomin' Brands has been in and out of bankruptcy and sold numerous times, from investor to investor to investor. So I look at this report and I say, okay, Domino's is reporting it. That means a lot to me. But the fact that McDonald's is reporting it, I don't really care that much.
So
Bloomin' Brands is reporting it. I really don't care at all. Completely discount that out. So it seems to me like they cherry picked a few businesses here to make their own points.
I feel so. Here's the thing. I hear this tariff and inflation issue, right? On some of these earning calls, or in the articles that have been written about some of these earning calls, and I compare this back to Brandon, if you will. I mean, we've had this podcast now for a few years, right? And we've covered the times where supply chain issue in Ukraine. Ukraine was a topic a year after it was an issue. Still on earnings calls, people were trying to blame Ukraine and supply chain when the issues that were directly affected by Ukraine and the supply chain are already over with and past. But the corporations were still on the earnings calls trying to blame that for it. What I see it is they're using it as a scapegoat to blame poor performance. Some of these corporations are doing that.
Some of those companies are doing it. However, the supply chain in many ways is still broken compared to what it was years ago. Um,
Well,
after
how do you
COVID,
mean? How do you
huh?
mean? How do you
Well,
mean?
what happened was a lot of these smaller companies that handled certain processes on the supply chain during COVID, they went out of business. And it turns out that that was quite a bit. And so we're trying to navigate a situation where we've got, certain small manufacturers and a ton of them that went out of business because of COVID. And now we're trying to figure out a way to do those jobs without those companies existing.
So you talking
Yeah.
manufacturer or you talking transportation? Because those are two different apples and oranges.
Well, it's both, but they were both affected by the COVID lockdowns.
All right,
And,
so let's.
and
I mean,
it takes
because here I disagree with you, and I feel like our listeners want to hear this more than things that we've prepared. Because you look at like the LTL carriers, yellow, gone, right?
Mhm.
That's one example of transportation. Name what's another big one that's gone though? I mean, can you?
Not off the top of my head, no. I'm just telling you what has been
Exactly. They're
told to
all
me
still
that makes
around.
sense.
Holland is still around. Even the local regional ones around here, Dayton Freight, that's a local regional one here, is still around. You have you got the Roadrunner, which is the like I don't want a dog Roadrunner, but it's a bottom of the barrel like transportation LTL company. I mean, there's a lot of companies like that that are still around and still in business. The only one I could think of that went out was Yellow, and they had
But
a bad arrangement with its union. We covered it on the show. We covered the numbers.
yeah, but there's a lot of trucking companies that were smaller than that went out of business too. But we're not just talking about trucking companies, we're talking about manufacturing here. There's a lot of links in the manufacturing process that you don't notice until they're gone. Um,
Yo, do
they,
you have an example to show though?
Not off the top of my head, but I can get one for you by next week. I didn't plan on us having this discussion,
I didn't
but
plan on having this discussion either, but I mean, I feel like it's one our listeners want to know because I don't think the supply chain issue should be a reason why a company does bad nowadays. There are too many other companies in place ready to take up that business, ready to jump in and help. And if your company is failing because of a supply chain issue, whether it's in your manufacturing process, whether it's getting the core goods that you use to mix together to make whatever product you're putting in, or whether it's shipping of any kind, like you need to have the right people in place to make sure that those things don't happen. That's a problem in your management. That's a problem in your core group of people. They're not leading that company the right way, and I
okay.
don't want to invest in them anyway. So if I hear that, I don't want to invest.
Let me rewind this real quick. Let's go back to the old high school um, essay that we all read. Well, maybe not all of us, but I did on the pencil.
Okay.
There's a pencil essay and it's all about essentially capitalism, the supply chain, and all of that stuff. That talks about how no one single company makes a pencil. There's no one company that does it. There's people that that get the lead and make the process the lead. There's people that process the wood, the rubber, all of that stuff, right?
Yeah.
The people who are making the wood for the pencil are not the same people that are making the rubber for the eraser.
Correct.
If the company that makes the rubber for the eraser, there's a rubber shortage, the people who are making the wood have absolutely nothing to do with that, other than the fact that they're going to maybe go somewhere else for the rubber, the pencil
Yeah.
company.
Yeah. Correct.
So if you're manufacturing a component for something that requires somebody else to manufacture a different component that's inside of what you're manufacturing, and that company goes out of business, and a lot of those companies go out of business, now all of a sudden the cost of what you're looking for is going to go higher, and the amount of people that you can go to is going to be less.
You let me know when that happens, and I will jump in, and I'll be worth $200 million in 3 years because if that happens in any industry, I'll jump in, I'll create that company, and I'll make $200 million.
It happened over COVID. This
In
is
what
exactly
company?
what happened during
In what
COVID.
company? What company? What business? What manufacturer? Because you could create the company and you fill a void, you fill a need, and it's an immediate need. So
It doesn't. It
you
doesn't.
have immediate
It's
contracts, you have immediate business, you have immediate cash flow coming in. You're net positive cash flow all from the word go.
it's not the snap of a fingers. This takes time for us to fix. There were massive problems created by the global shutdowns of COVID.
There were,
Massive
but they were. I
problems.
mean, they were all filled by other companies, other innovative business people who saw opportunities and jumped in and filled them.
Well, some are saying that it's not quite fixed yet. That's what I'm getting at. And I think it
I
makes
I I don't know. I think that's a lame. I don't know. Makes me not want to invest in that company.
okay.
You don't have the right people in place to solve those problems and plug those holes.
I can't disagree with you on that, but I've been in multiple industries over the past 4 years, unfortunately. Just, I kind of had to job hop a little bit, and every single industry that I was in was facing a shortage of some sort still. And I'm still in contact with the people at the previous companies that I was at, and it's still an issue. So
Well,
that's what I'm getting.
I know one of your previous companies, and one of their problems is they have select suppliers
Yeah.
that they don't want to change from, they don't want to move from, and certain product from certain areas that they don't want to go anywhere else from. That's their choice. They're making the choice to fail at business in that manner. They could go to someone else, they could go to a different supplier, they could go some and get a different deal, but they choose not to. That's their choice. That's why that company's lost market share. Look at them. Look, you don't have to take my word for it. DM us if you want me to tell you the name of this company, but they've lost market share
Probably
by
don't.
over 10%
More
over
than
the
that.
last 4 years.
Over the last 8 years, it's been more than that. But
And that
one of
they're
one of
failing
my
because of
previous
their own
companies,
problem.
not my current
They're
company,
like
which
that
I'm not
meme
going to
that
talk
putting
about.
they're the meme putting the stick in the bicycle wheel, and then they're like, oh, ow. It's like, no, you did it to yourself. I don't feel
Well,
sorry
I
for you.
agree. I agree, but these problems do take time to get over. And this was we can agree on this that were massive, massive problems created by those shutdowns.
Yeah, there was,
Yeah.
but most all the successful companies have moved on, moved past, and solved.
In certain industries, I mean,
And
you can't compare like technology to steel manufacturing. It's two different things,
well, the
right?
company that found and I covered it here on the show in this podcast, the company that found that big, huge lithium mine up in northern
Canada.
continental United States. I can't remember if it was North Dakota, Montana, or Idaho, but
I
it's
thought it was
one of
can.
those ones.
Oh, it was.
Huh?
You're right. I thought it was
Yeah.
Canada, but you're right.
Yeah, it was up there in one of those states and that borders Canada, and they had a huge mine, and that company's valuation like quadrupled in just like a few weeks because of it,
Right.
because they
Right.
found that they discovered it,
Right.
and they solved an issue that was needed, which is lithium closer to the United States for manufacturing purposes. Bing, bang, boom. Those people are now worth hundreds of millions of dollars.
Yeah.
I,
But it's
I
not.
covered it
But
here on the show.
again, that was probably 10 years of research and development to get to that point.
Yeah, but lithium wasn't worth then like it is now.
Yeah, but do you think that they just fell into that? Like that could have been something that they were already researching and they got lucky with it.
I covered it on the show. They said they were looking for other metals and other ores, which is what they found, and they were digging for that. And when lithium prices went up, I'll have to go back and find the actual podcast that we did this on. But when lithium prices go up, they started realizing how much lithium they had there because they weren't digging for that. They were mining for other things. They stopped mining for the other things, and they focused on the lithium.
Gotcha.
They
Okay.
found
Well,
there
now
was a problem. They solved the problem, found a solution, and now they had lots of money coming in because of it. That's what I said. If you have a problem in your supply chain that's affecting major companies, and they can't get rubbers, go back to the pencil analogy. They can't get that rubber. I could come in, create a company, and start pushing out that rubber to them, and all of a sudden, boom, you can sell that company off and retire.
there's a lot of X factors there though too at the same time. There
It
really
takes
is.
it takes a driven mentality
It does.
and
It
you
does. But
can
where you
and the
okay?
right kind of
So let's go
connections
to.
and network
I,
and you can do it.
I'm gonna try to keep this short. So the rubber that you're getting, what country are you getting it from? What regulations do they have? loopholes do you have to jump through to be able to get a license to get the rubber to manufacture the rubber? I think it doesn't rubber come from a plant. I could be wrong. I think it comes from a
Yeah,
plant.
the base part of it does. Yes, comes from a
Okay.
plant. Most of
Never.
it's in South America. You know, there's a country in South America that has turned very capitalist, and you could probably reach out to that government and say, "I want to invest in here because you've turned to a capitalist environment. You want to boom your economy. I want to build some manufacturing plants here with the rubber, and let's grow some more rubber trees in your area." Argentina will say, "Yes, let's do it. Let's make this deal happen." Bing, bang, boom. I got a
It's
deal.
not bing bang boom. It doesn't happen overnight.
I know you hate that. Bing, bang, boom.
Because the graphite. Now the graphite. Now you got to find somebody to make the graphite for the pencil, and
I don't
Nordisk
have
is
to.
not confirming that.
I'm not the pencil company. I'm the rubber guy. I don't care about the
You're
rest
the
of it.
rubber,
That's his
but yeah,
problem.
but you're
That's
not.
his problem.
Yeah, but now you're going to lose money on pencils because the graphite company can't figure out, what to do. So that's what I'm saying. Like the supply
Oh,
chain
now you're
matters.
just pulling out different arguments from everywhere. Like, oh, there's this now. Yeah.
All
I see
right.
solutions. I
Well,
don't see problems.
we
I
should
see solutions, not problems.
we should move on. Let's move on because I never thought I'd talk that much about rubber on this podcast. I didn't plan on that.
Right? Neither did I. All right. Rules. Brandon and I get together 5 to 10 minutes before the show and we tell each other what we're going to talk about. You're here to lie back and forth, to bicker and to banter like you just heard just now, right here on the show for you. Brandon, take it away.
Companies like Domino's, and I'm going to cite this article. I think it was from Market Watch, and it was rather bearish on the economy. Like I said, companies like Domino's, McDonald's, and Bloomin' Brands are reporting that pressures are affecting their business regarding inflation. They said that that's leading them to focus on value. Bloomin' Brands and McDonald's discount from this situation. They were having problems already. Federal Reserve Vice Chair Philip N. Jefferson said that retail spending growth has diverged across income groups since the pandemic, with low and middle income households feeling more strained. Essentially, what's happened, the top 10% of people are now currently responsible for about 60% of the expenditures in this country. And that's high, relatively speaking, to history. And they're saying that that's not a sustainable percentage.
That creates a more imbalanced society. It's not sustainable because it's not good for long-term economic growth as a whole country.
Because what's
From an economist standpoint, yeah, that's not good. That's not
Yeah,
sustainable.
yeah, it's not. And they're saying the cause of this is that the middle class and the working class and the lower classes in the United States, economically speaking, are feeling the pinch of inflation. And we have been, for the past, well, since COVID, we've been feeling it. But it's continuing to get worse and worse and worse. I think that there were a lot of people that were living paycheck to paycheck, right? So inflation being at 2.6%, that may seem low, but for somebody who's paycheck to paycheck, that 2.6% year over year is going to put them negative,
Right.
make things a lot more difficult for them. Whereas the people in the upper class, the top 10%, they're not as price sensitive. So what's happened is not that the top 10% is spending more, but it's that the top 10%, well, I'm sorry, but it's that the middle class has stopped spending as much.
Yeah. Yeah, and it's because going paycheck to paycheck has now risen so much up the income levels that it's hitting the middle class is now living paycheck to paycheck. The upper classes, it's so hard for it to really affect them from a daily standpoint because let's say for example, Brandon, I got $1 million, right? In
Right.
my stock trading account. And I sit there and I'm trading Tesla and it goes up and down 10% every other month. All of a sudden now I could pretty much if I'm timing it not even correctly, just sort of close.
Right.
You can make 10% a month off of Tesla. That's $100,000 a month. Just off of cash I had sitting there in my brokerage account. It's very easy, is my point, at that point to make enough money to not worry about inflation versus a middle class individual trying to move up into the upper income classes. It's very hard because now they get hit with inflation. They have to stop their investing into whatever small side business they got going on or some retail investing they're doing, and they got to take that money and put it towards everyday bills,
Yep.
and that slows down their progress a lot.
Right. right. And then they're not buying, they're not going on vacation as much.
Yeah.
They're not eating out as much. They're not buying as much Starbucks. You
Yeah.
know, and it just kind of goes down the line. It's a snowball effect.
And the lower income typically don't do any of those small business side hustles or retail investing. They're just working just to hand to mouth, if you will.
Right, right. Now, meanwhile, while all that's going on, job searches, according to the Bureau of Labor Statistics, are taking longer. Last month, people were unemployed for a median of 10 weeks, up from 9 weeks in February 2024. They said that more people are experiencing stretches of unemployment lasting 27 weeks. I'm curious where they get this median from 9 to 10 weeks, because when I was unemployed, I feel like I was pushing that past that like every single time. So
Really?
that doesn't sound bad to me, 9 to 10 weeks. It's maybe
The
I'm a
the
little
last time
expecting.
the last time I didn't have a job of some sort, right? Right now I have a job that gives me great health benefits. That's why I work it. Am I capable of doing something more than my job, competent wise, or that would challenge me more? Yes, but do I have I taken it? No. The last time I didn't have a job, I quit working. I retired. It was from a company we both were working at, and I didn't work for a number of months, but by choice. And I enjoyed it.
Yeah.
And but it was for me, it was choice. I was trade stocks on Monday and Tuesday, be done for the week, and I would literally go play like Xbox or something the rest of the week and be the top guy. At that time, this was 2017. I'll be the top guy on Battlefront and Elder Scrolls when it first came out, and just everybody would recognize my gamer tag at that time. But
Nice.
um, I that seems like a long time to go without having a job, especially if you were let go. And do most people don't have 10 weeks worth of savings, I would assume,
No, they don't. That's a mistake too, by the way. Yeah.
right?
Work on that. Seriously, save your money.
Have something away for a rainy day.
Yeah.
Something.
Yeah. Most people are
Yeah.
saying too that they're worse off than they were 5 years ago, which also is surprising to me because I feel like
Yeah.
most people that I know are better off than they were 5 years ago. But
Well, here's the thing, Brandon. Like, all right, so and here's how I put it. And I really want this to go out to our listeners too, because this is good advice. What you're saying, Brandon, is something I tried to live by, right? So
Mhm.
you know myself, right? You know other people in our, let's say our chat groups, right?
Mhm.
Who are the people in our chat groups? Most of them are myself, right? We have two other individuals. I'll just use the first initial of their name, K and M. All three of us are business owners. All three of us, have multiple trading accounts, have other investments going on, and we're forward looking. You know what I
Yeah.
mean?
Well, I don't have a
And so,
business, but I mean, other than this,
yeah.
which
And
is
then
nah.
you and I also know the similar person, T, and business owner,
Yeah.
has other side hustles and things going on.
Right.
Forward looking, investing in assets that produce passive income, right?
Right.
When you surround yourself with that people, you surround yourself, you're like, everything looks good to me, but it's just the people you surround yourself with. And
That's
so if you look around, like I'm talking to the listeners and not to Brandon here. If you look around and you're like, hey man, I don't know what Dave and Brandon are talking about right now. Everybody I know is not moving forward. I'm not saying you have bad people around you. They're probably great people, probably wonderful people to be around. But you gotta have some people around that are gonna drive you. They're gonna push you, and that are gonna also be looking forward to have success and want to get to that next level.
well, I don't own my own business, but I do appreciate that. This is kind of a business in a way. I don't consider it
This
though.
is a business. It's an LLC. I own it.
Yeah.
It's listed as a business. I don't have any tax write-offs from it, even though I probably could. But
Well, the U.S. economy added 151,000 jobs in February, slightly lower than what was expected. The $170,000 job, 170,000 jobs. I mean, um, unemployment for people that they call marginal, with the marginal attachment to the workforce, that climbed to 8% from 7.5%. I mean, it wasn't good, but it wasn't terrible. And I think the stock market kind of overreacted to this news right now. One of the things that they were looking at, one of the reasons why the stock market panicked, is they said the duration of the average work week remained at 34.1 hours, which is supposedly a historical low. I don't see a problem with that. I think that technology is driving more innovation and more efficiency. We don't need to work as much as we used to work.
Aren't we still the most productive worker in the world? Am I not? Am I incorrect on that statement?
I would guess, but I don't know.
I'm going to Google that while you're talking.
I
But
just found this to be kind of boring. The job numbers were kind of boring to me. People panicked on them, which made it a little bit more exciting because it created some more value. But I just don't see this. This was not something that tilted me either way, bearish or bullish. It kept me the same. There was no reason to panic over this yet.
we are in the top five, but we are fifth.
Okay.
We are fifth. The most productive countries, and I'm looking here at like multiple websites. So there's more than one website saying this, right? As far as workers, number one is Luxembourg. Number two, this is strange, Ireland. Three is Norway. Four is Belgium, and then the United States.
Okay.
Uh,
Interesting. I wonder what the reasons are there.
yeah, especially Ireland.
Well, I know
When did
Luxembourg's,
Ireland become that?
I think Luxembourg's fairly libertarian.
Are they? Okay.
I believe they are. All right. Well, I wanted to go into Costco here, so I'm just going to be quick about this one before I get to the main thing. Um, Revenue for Costco, 63.72 billion. That was above the estimate of 63.11 billion. Same store sales growth were 6.8%. E-commerce sales surged to 20.9%. I relatively good earnings report here, despite that. Costco shares were down like 6% the last time I checked. Still not to the level of a buy for me. Still a little bit too expensive, but it's definitely one that is on my watch list. It's why I listen to the conference calls, why I watch the earnings and all of that stuff. They're planning for 28 new store openings this fiscal year. They did say that retailers are unlikely to feel unlikely to avoid the impact of tariffs, but they think that their suppliers are are good enough and are mobile enough in order to adjust for the issues and to not have to pass on price hikes to consumers as much as other people would have to do. They're very confident in their adaptability to this, in other words.
Yeah. Costco's had a good gap up recently. They deserved that gap up recently. Full well deserved. I've always said it's one of the retailers I would buy. I am going to lower that to a neutral. I'm no longer saying buy on Costco. I feel I want to see more out of their fundamentals because they gapped up. I believe their PE has risen a lot, and
Yeah,
so
it has.
I
It's
I want to see things level out, if you will, before I go back into yes, this is a buy for me. So I'm saying neutral on Costco for those reasons. PE has gone up, stock has gapped up. I think it's well deserved, but I think I wouldn't buy in right now.
interestingly enough, they said they had solid demand for electronics, televisions, gaming computers, and they added in pinball machines. Only Costco.
There's a big market in pinball machines right now, Brandon.
Right. Only Costco would have that in the earnings. Um, so I was surprised by that solid demand for electronics. That's good news. Um, in regards to foods, they said that the two uh, strongest demands that they were showing higher end meat products and lower end meat products. Anything in the middle was not growing very well, but the top and the bottom are growing fastest.
Hmm.
That's an interesting fact for me.
Very interesting.
Um, yeah, they said as far as tariffs go, it's very fluid environment for them. They're well adapted and easy, easily adaptable to it. As you were saying earlier, Dave, as far as the supply chain, I guess this company is a little bit more adaptable than others.
Because they're a
Uh,
good company, solid company, good leadership in place, able to plug the holes when they arise. That's a company I invest in. I don't invest in company. Oh, I don't know what I'm doing.
yeah.
Sorry.
So they did say that shoppers are becoming more selective in spending. I'm surprised that Costco is saying becoming because this has been kind of a trend in all retail and grocery for years now. But so they did
Well,
say that is more
yeah, if it's
selective
not
with
on a
spending.
TikTok, I can't buy it, right?
Right. So that's my judgment of the overall economy right now. People kind of wonder why I'm a perma bull on stocks and individual companies, and oftentimes I'm a bear on the overall economy, right? So I'm sitting here, I'm thinking, well, we could very well see a recession in the next 3 months, but that's what I'm thinking.
I thought you were a bear at sometimes, just all around. Like I remember a couple of years ago, you were just bear, 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 bear.
I mean, yeah, but if I find something that is a buyable, stock, it's something that's a good value, I'm gonna buy it because I'm thinking there might be a recession, but I could read somebody's balance sheet and know that the stock is undervalued and know that in 10 years I'm gonna have a good return.
There you go.
Yeah. Speaking of that, one of those companies is Nvidia. You guys got to
That's
buy that
right.
company. You got to buy it right now. I start buying it right now. I wouldn't buy it all up front because I do think that we haven't seen the bottom, not just on Nvidia, but in the entire market. But again, that's what I think. What I know is that you're going to see a good return on Nvidia over the course of years.
I made a good trade on Nvidia just this in January. I made a quick, what was it? I forget what it was, like 8, 9% real quick.
So, I mean, their recent
Loved it.
earnings, again, record-breaking quarterly revenue of 39.33 billion. This is a 78% year-over-year increase. The company right now has a price earnings ratio of 38, and I think the forward PE is around 26 or 27. This is the cheapest it's been in a very long time. Just
Yeah,
as
it's at 112. 112 right now.
what is? Oh, the stock.
Nvidia.
Yeah,
Yeah.
and the company. Yeah, the price of the stock. Adjusted net income rose 72%. Data center revenue doubled to 35.6 billion. They've successfully ramped up the production of its Blackwell AI supercomputers. They achieved billions in sales in their first quarter for this. Nvidia forecasted fiscal first quarter revenue of $43 billion, slightly above the analyst expectations. Despite the results, they were flat after earnings and then they were down again after that. The sentiment here on the overall semiconductor and computer market is terrible, but this company is still on all four cylinders. Go ahead.
So what I heard from the talking heads, aka your favorite person, Jim Cramer, Blackwell chips. They some people are questioning whether or not you need the Blackwell chips, and they go back to DeepSeek. They go back to other companies saying that NVIDIA has created good chips in the past. That it's not necessary for everyone to upgrade to Blackwell. And they're continuing to have in some problems with the Blackwell chip. I still haven't seen the articles on what these problems are that people keep quoting, but it's that's where the it's going forward guidance. They're worried about the future state. Yes, right now Nvidia is making money hand over fist.
Guidance.
And the comments are, the future state. Can Nvidia keep this up? They need to reinvent. They need to do something else and just, be this one trick pony. And I think it's a little too early to be saying Nvidia needs to come up with something else right now. I feel like they could write this out for a good another at least what 3 years.
Yeah, okay, but they will. The thing is, they will come up with something else. They've been a very innovative company. They've been ahead of the curve on everything, which is why they're doing so well right now. Back when the price to earnings ratio was at like 72%, 80%, even higher at times, I said that, wait a minute, I need this company to justify the valuation. I need that price to earnings ratio to come down. I need the
And I
valuation to
said
come
bye,
down.
bye,
It
bye.
has. It has come down. And part of that, the good thing is the stock has reversed about 25% from its all-time highs, close to that. But also the fact that the stock is earning so much. This company is earning so much, bringing in so much revenue. It's doing it at a pace that is outpacing the price to earnings ratio of the stock itself, which is also good news. I say the same thing. I say that like what the growth that we were experiencing last year is probably not going to continue in Nvidia. Even the growth that they experienced in this quarter may not continue. But we're right now at a cheap enough price to where I say it justifies it. Buy it anyways. Because even if growth gets cut in half, this price to earnings ratio is still cheap, even at that moment. Even if we say revenue gets cut in half from 78%, still having that 30, what did I say it was like 37, 38% price to earnings ratio would still be cheap. There's no good reason to not buy this company tomorrow if you don't already have it, in my opinion. And I don't buy
Yep.
hype, right? I don't. This
You
isn't
don't.
hype anymore. So the fact of the matter is when AI, when Nvidia first started killing it with the artificial intelligence, and everybody went crazy over artificial intelligence, I wasn't buying anything because I wanted some. My process is prove to me you can make the money, and then after that, I want to find a value.
Right.
We got a value, I think. I think this is a good time to buy.
I've been saying I'm gonna name my next kid if I have one Nvidia since our Facebook groups days back in what
Yeah.
2018.
Now, the funny thing about Jim Cramer, with him being moderately bearish, I guess, on Nvidia now, once sentiment turns bullish, he's going to say, I've been telling you to buy Nvidia since 2011. But he's going to completely skip all the times that he told you to not buy it or that he told you to sell it. That's
Yeah.
why I don't like him. That's why I can't stand him. He did the same thing with Apple. He's done the same thing with Meta. I
Yeah.
mean, if he bought it the day that he was crying about Meta, saying what a failure they were, I don't know, 2, 3 years ago, you'd be making a lot of money just like I am on Meta right now.
Yep.
So I
Yep.
I discount him. You know what he's good for? He's good to get a read on the market sentiment for the day because that's what he does. He just parrots back what the market sentiment is on a show.
Yeah. I mean, for the most part, I would agree with you. He does have a lot of interviews with CEOs that we don't get that we get to see, and he does have a lot of access we don't get to see. But I mean, there's the Inverse Kramer Fund, and it's making money. It's profitable. What
Yeah.
does that tell you?
A
What does
lot of
that tell you?
those a lot of those interviews are just softball questions too.
Yeah.
I don't. I've been enough critical on Jim Cramer. I'm going to turn a new leaf and stop being so critical and stop mentioning his name. But yeah, a lot of it's softball questions. And look, these CEOs and a lot of these board members and stuff, you kind of got to take the mood that they're saying things with a grain of salt because it's all happy faces and all joy and stuff, even when it's not necessary, even when they don't, it's not appropriate.
Yep.
Right. A lot of
Yep.
these companies, even during their conference calls, they'll reach and reach and reach for something and they'll say, we broke a record in sales for this quarter or whatever. And then you look at the book and you say it doesn't even matter. It didn't make a difference at all, but they were just trying to find something positive to say, right?
Yep. Yeah. Or the way you read your earnings. If you look at our non-GAAP pre-EBITDA non this minus taxes, we were positive here in this
Yeah.
section.
Yeah.
Like,
Yeah.
okay. But
Adjusted earnings. If you look at our adjusted earnings, they were great. Well, that's because you adjusted it for what you're calling one-time only fees or, expenditures that you had that were billions of dollars that actually put you in the negative. And then you look back at the reports from the previous, quarters and you say, wow, you guys have a lot of one-time write-offs and charges that hit you on a pretty consistent basis. Your company's actually doing pretty terrible.
yeah, just be great and just be profitable in general without any extra things in front of the word. Just be
Right.
profitable.
Yeah.
All right. So moving on. All right. I'm gonna try to cover some things here. I'm gonna at least cover this one. How about that? What I want to start off with is I've mentioned the current U.S. Secretary of Health and Human Services, Robert F. Kennedy Jr., a few times in regards to markets. And I've come at it not from a political standpoint, but from how is he going to affect the markets? There's a lot of fast food companies. There's a lot of I wouldn't say, I mean, I guess you call it junk food companies like chips and candies and creams and like I don't know. But you know, these companies have a vested interest in knowing what is he going to do with the markets because he's made critical about all the food colorants, the dyes, the additives, the preservatives we put in, and that he wants to make us more like Europe, where we get rid of that. A lot like Japan, where we get rid of that, and it's more of natural foods. And I, for one, Brandon, and I mean, I don't want to get political, but I agree with him on that. Let's get rid of all these things out of this. But that's going to directly affect a lot of these companies, and it's going to hit the cost of manufacturing these foods. So it may make foods become more, not too much more, but more expensive. So it popped my interest here, and this is going to lead into a number of other investment ideas and other things. You'll see where I'm going in a minute, or no, actually in about 5 minutes. But this came across the news wires yesterday on Reuters at 10:43 a.m. The headline reads: U.S. Secretary of Health Kennedy to meet food company chiefs next week. So he's actually holding a meeting with some of these companies. Some of the companies are going to be like General Mills, PepsiCo, Coke, coming to meet with RFK next week. So the idea of such a meeting was first seeded among industry players in February. It was led by the Consumer Brands Association. They represent packaged food companies, alcoholic beverage companies, and others. He's trying to meet with them to kind of set the tone for what he's going to do, right?
Right.
What he's done on the campaign trail. Sorry, he's made calls for banning hundreds of food additives and chemicals. He's called for getting ultra processed foods out of school lunches, and a part of a goal to reduce the incidence of diet related chronic diseases. That's what he wants to tackle. So it's all about chemicals and sugar and getting these things out. But the first step is meeting with these companies next week. And I've asked you this question 2 weeks ago, or was it 3 weeks ago? But again, do you believe RFK being in health and in the Secretary of Health and Human Services is going to have a direct effect on the bottom line of companies like General Mills and Pepsi?
Yeah, probably.
All right, and do you see a short term headwind then to these companies because of it? And by short term, let me define that: the next 2 to 3 years.
Yeah, probably.
Okay, so you agree if by saying those things, do you think that maybe you wouldn't buy those companies unless you saw enough tailwinds opposite that to push it forward?
I'm studying Pepsi. I owned it once, sold it. Can't remember if I made money or lost money. Go back to other podcasts if you want to find out. I don't remember what it was.
You made money, I
But
believe.
but I've been wanting to get back in at a better discount at a better price for Pepsi. Just because of how much of the supermarket shelves that they own,
A
and
lot.
and honestly, they're one of those companies that has a really good supply chain.
Yeah,
So I've been wanting
half
to
of
get
the
back.
half of the chip aisle is Pepsi.
Now, most high schools in the United States, if not all, I think actually all of them have gotten rid of the pop machines and the sodas and stuff already. Anyways, now I don't know if they have Fritos or anything like that. I have no idea. I haven't been to a high school in a long time, so I don't know if what they're serving for lunch. Um, but
It's still not
yeah,
healthy like it should be in my mind.
right, right. And I would assume that, just him being in this administration and looking to cut all those things back and looking at more regulations probably for processed foods and even GMOs are probably going to have a negative effect over the industry over even maybe even the long term. I don't know. But I will say this, I hope that I think it's a good thing that he's going to meet with these companies to talk to them first. I think that's a great thing. We don't want to put anybody out of business. But and at the same time, I hope that he meets with scientists too regarding GMOs.
Yeah.
Because GMOs can go a very long way to solving food shortages, especially in third world countries. They're not always a bad thing. In fact, there's probably more positive to negatives to GMOs. So we need to be careful there. But as far as the companies go, yeah, I'm waiting. It may push Pepsi down to a price to earnings ratio and price to book value that I have to buy it. I'm not touching Kellogg's. In fact, a lot of the consumer staples have been on a decent run compared to the rest of the market in the past couple of weeks because people are looking for dividends and people are looking for certainty. And a lot of those companies have been bought up to levels that they shouldn't have been anyway. So,
Well, the one I started calling last year, telling people if you want a dividend play, buy Altria Mo. If you were listening to me last year and you started buying dividends in Mo, you would be up over 25% right now, almost 30%.
doesn't Altria make cigarettes?
That's one of the things they make.
So
That
we went on
wine,
the, yeah,
vaping. It's a that's why the PE ratio is so good. People don't want to own it
yeah,
because it has a negative effect. But I said, look, if you want a solid dividend that pays every single quarter, I mean, this company pays every quarter. It's a great dividend. That's what you're gonna
yeah,
get. But yeah, you got to own, a cigarette, alcohol, vaping, all the vices you could think of. They own.
yeah. So stop buying the sugary cereal stocks and start buying those tobacco companies.
There you go. Yeah. So I mean, this is the move that America's in, right? The mood is it's health. Let's be healthy, right? That was kind of the mood of that I got coming into this year, 2025. And the reason why I say that is because last year was a good year for which companies? It was a good year for Eli Lilly and Novo Nordisk. And I'm talking about GLP-1s, and those products hit the shelves. I made a good investment off Novo Nordisk at a great return. I sold because I saw all these lawsuits come in. I saw a lot of trouble. They started having clinical trials not show what they wanted. I got out. I made my money. I got out. It was great. Stock dropped. 2 weeks ago, I said, well, look at this. All these generic companies. We talked about Hims and that company, and we talked about their upcoming earnings call. And I mentioned that hey, Hims is going to be told that they have to stop selling this. That's 200,000 people that now have to buy from Novo Nordisk. And I said this Novo Nordisk stock is going to go up because of it in the short term, and it did, but it came back down. It came
Yeah.
back down because the broader market came back down and because there was a lawsuit brought against it again for some of their claims that were out there. But it's going to be dismissed, and I think Novo Nordisk is going to survive it. And all these people are going to still be taking GLP-1s. GLP-1s is still a huge thing. Let me give you some stats, Brandon. You ready?
Well, let's just say this way. Let me say this one thing real quick. So I brag a lot about Meta, but you bring up the pharma industry and look, I make mistakes too. And boy, I missed the mark on Pfizer. I was just gonna say it out loud. We go ahead.
Right. Yes. Hey, we got to call out our mistakes too, man. We got to call them out. All right. So the only thing I could find, I researched. I started looking for different articles, different stats. I even went to the National Health Human Services to see numbers. I couldn't find the most up to date numbers. So here's one from middle of last year, and it's GLP-1 drugs, and it gives you some stats on GLP-1. Right. In it, it said that 1 in 8 adults have that's 12% of all adults in the United States said they've taken a GLP-1 at one point in time. 6% of all adults in the United States are currently on a GLP-1 of one kind or another. 4 in 10 adults have been told by a doctor they have diabetes. 25% have been told they have heart disease. 22% have been told by a doctor they're overweight or obese in the past 5 years. 32% of adults are now said they've heard a lot, quote unquote, a lot of things about these GLP-1 drugs. That was up from just 19% the year before when I started covering it. I give myself credit for that, right?
Right.
Just joking. So most adults said they've taken these in order to treat chronic conditions like diabetes or heart disease. 4 in 10 of them, this is 40% of people who've taken a GLP-1, have said they took it just to lose weight. So 54% of all adults who have taken a GLP-1 said it was difficult to afford, which is why the Hims stock took off. But Hims is no longer allowed to sell these. So 200,000 patients starting next month, right now in March, that now starting to have to switch over to either Novo Nordisk drug Ozempic, or they have to switch over to Eli Lilly Mounjaro. That's a lot of patients. But when you think about this, Brandon, that 6% of all U.S. adults in the nation right now are on a GLP-1 of some sort. That's a crazy number. And then you think about, okay, is this the end? Is Novo Nordisk and Eli Lilly going to be the ones who run the tide here, and nobody else can come out with anything? Well, no. You can always improve upon a drug that's out in the market. There's those statin drugs that treated high cholesterol. They were out for about 10 years. And then now I'm going to forget this. I'm already drawing a blank. I believe it was AstraZeneca, correct me if I'm wrong, came out with a statin drug that just blew them all away. It was better, it was quicker, it was faster, and it had just a fraction of the side effects. And AstraZeneca made billions off of it, right? But the statin drugs had already been out for 10 years at that point. So you have these weight loss drugs that are out right now. Novo Nordisk and Eli Lilly are making a ton of money off of it. But Amgen is coming out with a weight loss drug that is meant to be better and less side effects than both of those drugs, and is on its way through the clinical trials right now and is having some great success. Do I buy Amgen because of this? No. Clinical trials, you got to look in at the detail of these clinical trials. They can make clinical trials look one way or another, and it can be a big mess. Um, but it's definitely one thing to look at. Amgen as a possible there. I still think Novo Nordisk is going to go back up. I don't think it's going to go back up to 130 again. I think you're going to have a nice little, swing up here, swing trade on Novo Nordisk. Eli Lilly has so many other drugs in that they service that I think they had their run up of Mounjaro. I think they're priced correctly. I don't see any big movements in Eli Lilly based off of Mounjaro. I see Novo Nordisk, however, because it's focused mainly around Ozempic, that that can have a big effect on Novo Nordisk stock and the stock price. Thoughts, Brandon? I've just talked for a couple minutes. What do you think? What do you have to say?
Oh man, pharma. I don't know. I think I just want to stay away from it now for a little bit. I'm still hungover from Pfizer, but now I just the weight loss thing for me has just always been so murky. It's been kind of like in the same category as like hair growth drugs and um all that. It's just and even the companies that came out and tried to sell like a healthy style of living, like Jenny Craig, for example, got shady for a little bit. And then that
You
one
know,
that was, what was the one that was backed by Oprah? You remember that? I don't remember what the name of that company was, but even that was a little
so
shady and people
you
were,
said you said this like 2 years ago when I first talked about Novo Nordisk, and I gave you the clinical in 2023. I gave you the clinical trials. I said this isn't a new drug. This drug has been around for almost 10 years for diabetes. This isn't new.
yeah,
They
but
have
now we're,
studies on it. They know the long
profess,
term effects.
yeah, but you mentioned there's lawsuits coming out for people that probably shouldn't be on the drugs that
No,
are.
and it's not for the drug usage, just because of Novo Nordisk, and it's for man. I need to pull up the article, but it's about stock manipulation. They're saying they
Oh,
released data that was incorrect, and they gave the assumption that certain data was showing this when it wasn't, and they manipulated the stock price to be inflated when it wasn't. So it's
what data?
SEC. It's SEC lawsuit. Again,
What data?
I had the article up and I closed
Yeah.
it, and now I got to find it again. I don't
But
want to
but
do it in the
are
middle of the
they
show.
so data based on medical research and medical studies? Is that what they're saying they falsified possibly? I,
It was falsifying the end assumption, the conclusions
well, that's a
based off the
problem.
data.
That's shady too.
Yeah, but I mean the actual drug itself is fine. It does its job. It works. The side effects are well known to everybody who takes them. It was some people inside Novo Nordisk that were trying to do the wrong thing in order to push the stock price higher.
Well, that's another reason to stay away from it if you're an investor.
I feel like you could get that at any company though.
I don't think it's going to happen at Apple.
Well,
That's
not
it.
as long as Tim Cook's there now.
I definitely think it's happened in some ways at Tesla, but that's a different story.
So I mean, yeah, like I said, you could get it at lots of other companies, and so I don't think that's just pharmaceuticals. I think that's just you have people with low ethics in high up positions. That's what
Okay,
I think that is.
gotcha. Okay, well, they need to be a little bit more selective about who they bring up into higher positions. It does happen to
They
every
blew,
company.
yeah, they blew up
But
though. Novo Nordisk blew up from a mid to beginning to be a huge pharmaceutical company to becoming a huge pharmaceutical company
I,
very fast.
I just don't want to buy something that's going to become a Netflix documentary in 5 years.
uh, right? Yes, I hear what you're saying. I hear what you're saying. Um, yeah. I understand. I agree. I agree. One thing I'm looking at, guys. Actually, I'm gonna say it for my final thought. Brandon, final thought. Go ahead.
Oh, all right. I didn't even know we were going into final thoughts yet, man. I was having a good time on this show, but the there's a lot of companies that come out and do research in order to try to tell you how to time the market, and some of them have good studies that make sense for people who are trying to buy the overall market. For example, like an ETF like SPY, for example. Individual stocks, I don't think that this applies to in any way, so I'm going to say that outright. Using these studies as a tool to buy SPY or any other total market ETF can work, but you don't want to use what I'm about to say to, time buying Nvidia or Apple or anything like that. So since 1950, there's a company called 314. They've identified 128 instances where S&P 500 retreated by 5% or more from a rolling 3-month high. No surprise to me that 40% of that time the dip turned into a correction or worse because people panic when things start to sell. And the 42 corrections found, nearly 60% became serious corrections, which are 15% to 20% pullbacks. Uh, Again, no surprise, people panic. Serious corrections had near 70% chance of leading to a bear market. Again, no surprise, panicking, of course. They said that current market conditions are not ideal to buy the S&P 500 right now. The S&P 500 did breach its 150-day average. Valuations, they say, appear stretched. And essentially what they're doing is they're saying they recommend to wait another month to buy the S&P 500. And if you want to look it up, there's a list of, I think, 7 different criteria that they say need to be met before you buy the S&P 500. Um, the company is the number 314. That's the name of the company. The number 3, and then spelled out 14 if you want to look it up. Essentially, they're saying wait another month. They're saying that they don't expect a recession, but they think that this correction is going to get worse over the next 30 days.
Yeah, I don't expect a recession either. I think it's just a correction. I think corrections are healthy, and I think corrections are needed at least once a year minimum.
Yeah. So they're advising waiting another month for a viable market bottom. It's just another tool, just something else to keep a lookout if you're buying ETFs.
Gotcha.
But I wanted to bring it up and talk about it. They said that the dip buying was great from I think they said 2016 to 2021. That was kind of a golden era for dip buying. They think the people who are trying to buy this dip might be a little bit too eager.
Too eager.
Yeah. But you know what I always say, when you're looking at individual stocks, you don't wait because they think that, it's another month before you buy the bottom. But if you look at a company like an Nvidia, you see the balance sheet and you know that it's a good value. You operate on what you know.
Yeah, if you're trying to time the bottom exactly, good luck, man. I've done that by accident, I've never done that intentionally. It's too hard to time bottoms and tops of the market moves.
Yeah, and they're using a lot of 150-day averages and VIX stuff. They're using a lot of technical um, information here to reach the conclusions that they've reached. I would prefer to use valuations, and you can even find the S&P 500 price to earnings ratio and price to book ratio averages, and I would prefer to go off those personally.
There you go.
Yeah.
All right. Final thought from me is number one, pharmaceuticals. What goes on in the pharmaceutical world? Um, how to better understand it. There is a book I'm almost done. I'm on the last few pages of it. It is called For Blood and Money. For Blood and Money. It's written by Nathan Vardy, and it tells the true story of a blood cancer drug that ended up being used for lots of different things within the healthcare industry and has changed the lives of lots of people. But it gives you an inside perspective of what goes on in that industry and how these things work out and how they come with these blockbuster drugs and how these things come to fruition, if you will. I enjoyed the book. I thought it was very interesting. It was good to read the story. This person who wrote it from interviewing all these people involved with this project. You can go after you get done reading it. You could Google the name of the companies and the drug, and yes, it's a true story. Everything that happens in the book happened in real life. Maybe not all the little details. That could be just those people who got interviewed coming up with those details, don't know, but the actual drugs and everything happened. It gives you a good insight into the pharmaceutical industry. So I would say read that if you're interested in trading pharmaceuticals. Um, Bitcoin's dropped. Bitcoin drops and pops all the time. Bitcoin last time it was at 70,000, went back down to 30, 20,000, went back up to 50,000, went back down to 39,000. Bitcoin went up to over 100,000. Now Bitcoin's back down to 82,000 at this current moment. Uh, the thing with Bitcoin is that it continues going up, but it has ups and downs, and it's very volatile. Uh, Before in the past, I have said, "Hey, you can make quick money by day trading, some of these Bitcoin miners because they move very volatile with Bitcoin." I don't agree with that anymore. I think the Bitcoin miners, let's say Bitcoin moves up to 100,000, the Bitcoin miners jump up, but then Bitcoin drops a little bit. The Bitcoin miners drop by the Bitcoin drops by like 5%. The Bitcoin miners drop by 20%. And they never regain that back up in comparison relative to the Bitcoin price. The relative state decreases versus the price of Bitcoin. And it's just not a good way to trade that anymore, in my opinion. I even have an article on our website how I found Riot and day trading Riot, and I'm going to take that down because I don't agree with that anymore, and I've changed my views on these Bitcoin miners. I bring this up because I read an article on CNBC today that said, "Hey, these Bitcoin miners are poised to make a lot of money, and these are ones to buy because they're going to move higher." And I disagree with that article completely. Um, I think Bitcoin will go higher, but the Bitcoin miners just suffer too much whenever Bitcoin has a drop, and they never regain that percentage to the price of Bitcoin ever again. It seems like it separates further and further and further away. And I'll bring up Riot for example. When Bitcoin first hit $69,000 a coin, Riot jumped up to $30 a share. And you would have thought, okay, well, when Bitcoin hit 100,000, right, should have gone up to 40, right? No, right, still hasn't broke 20 again ever since Bitcoin dropped. And that's what I'm talking about. The price of Riot stock price compared to the price of Bitcoin relative has separated. The distance has gotten wider and wider and wider. It doesn't move it directly with Bitcoin anymore. So I'm staying away from the Bitcoin miners for that regard. But I still believe Bitcoin long term will continue to go higher. So
Let me
that's my thought on Bitcoin.
let me chime in here, and I could be wrong because I haven't been studying the relation like you have been, but it kind of
Yeah.
makes sense if you start thinking about it. Like a lot of those Bitcoin miners and crypto miners altogether have been fairly new to the market, but now we've got enough time to see what their books look like. So there's going to be some that are going to have different overhead costs than others, right? So I would assume that when these Bitcoin miners first hit the market, they were just trading with Bitcoin based on the assumption that they'd go up or down with it.
Yeah.
But now we've had a longer time to look at the patterns in their financial books and to see which ones are the best and which ones aren't.
Yeah. Yeah, I mean that's definitely one, and the cost too. Like a lot of these Bitcoin miners have to had to move their operations overseas. A lot of them have moved now to East Africa, some to South America. Ecuador has been very welcoming to a lot of these Bitcoin miners. I think the Ethereum, the Solana miners, the Doge miners, those are doing better. Those
Okay.
are doing better. Those miners are doing better. So if you have a more balanced approach as a crypto mining organization, you're going to do better than if you're doing straight Bitcoin and Bitcoin alone. And so there's definitely some there because again, not all these coins are going to survive, or even be of use or even be of substance. Bitcoin will. Solana looks like it's going to come along. Ethereum looks like it's definitely coming along. And then there's been others. Cardano showed up for a moment, disappeared. Ripple showed up, disappeared, came back. Is Ripple going to stay this time? Who knows? But the ones who are staying is Ethereum and Bitcoin.
Okay.
Those are really the only two that have consistently stayed relevant. And so I think Solana is going to stay relevant. I really do. Because it's used, like I've covered it, it's used in the gaming industry now. It's used in these meme coins as a base for trading meme coins and creating meme coins. I think there's always going to be a market for that, and Solana is now the base for that. Has become a base for all these weird things that I think are still going to exist because people are always going to try to come up with new things in that regard. So I see Solana hanging around. I think Ripple's always going to be in the conversation, but it's always going to be like the conversation of the cousin you don't really talk about, but it is a cousin of the family. You know? Yeah, they're our cousin. They're here at Thanksgiving, but we don't need to talk to them. So there you go. All right. So as always, we hope our conversations today, our arguments, our discussions, all the news we gave you has helped you become more efficient in stock trading. Hit that follow button, subscribe as always. We hope we've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.